Good morning, everyone. I'm Vince Lancy, and this is the morning meeting. And we will be talking about Cameco, which I have it on your screen right now. We'll also be talking about silver and running through some possibly important stories moving forward in our big picture concerns. Starting with the markets, the dollar is trading 105.50, up 12. 10-year yields are 448. Up 2. The S&P 500 is 51.84, down 1. The VIX is 13.24. Gold is 23.15, up a little over one handle. Silver is $1. Sorry, I've been looking at stocks this morning. Silver is 27.22, almost perfectly unchanged. Copper is 4.49, down 5 cents. WTI is down 70 cents at 77.97, give or take. Natural gas remains above 2 at 209, up another 3 cents. Bitcoin, 62,453, up slightly, but really getting chopped around lately. Ethereum, 3,004, basically unchanged. Platinum, Palladium, doing their dance. Palladium had that big $30 day, taking the lead, but over the last 2 or 3 days, it's been eaten away. So Palladium is 969, down 5 and change, and Platinum is 972, down 3 and change. Grains are down again, I think. Grains are all down again. Wheat down 5.9 cents at 639. Soybeans 12.32, and corn 4.52, down a little bit, offered unchanged. Let's call it that. I think it's interesting that wheat is now more volatile than soybeans, and historically you would trade soybeans for the volatility, and wheat you would trade it more than corn, but you wouldn't trade it that much. All right, you may remember a few days ago we talked about Cameco down here after the earnings report. We had also had some research from Goldman. Well, they have a new report out today, yesterday, but we got it. And it reiterates their bullishness and adds to the upside, which is probably why you had this 2-day move right here. So let's take a look at that. Here's the front page, yesterday's stories. Special gold CTA analysis. I got some CTA analysis to share with everyone, with premium folks. And before I put it out there, and I haven't put it out yet, I did a 5-10 minute voice note going over, I think, some important changes in perception and how important CTAs are or are not important in driving this market in the micro. Fred Hickey on mining margins, we talked about that yesterday. That was, I think, fascinating. And we have a political news feed. We just throw stories up there. We don't comment on them. House Democrats call on Biden to take executive action on the border. All right. Moving to the story, I have a lot to read today, so I want to read it. All right. Bretton Woods 3 is a process, not an event. That's something you keep in mind now, because as we come towards the Brics summit, which is in October this year, you're going to start seeing rhetoric ramp up. Russia is chairing it this year, so you will see it's going to be gradual, and then it's going to increase. You're going to start seeing more Brics headlines. You're going to start seeing more precious metals conversations. You're going to start seeing more negative comments out of Russia on the U.S. Some of them are going to be accurate. You're going to see more challenges to U.S. dominance monetarily. And that's part of the process. Since Bretton Woods 3 is coming. All right. Cameco. Hope I'm saying it right this time. A founder's mother reminded me that I said it wrong last time. Anyway, I hope I'm getting it right now. All right, here we go. So Goldman had started covering Cameco, and then the stock rallied, and then the earnings came out and it got hammered, and then they reiterated their support and actually raised their upside target. So let's read what they wrote here. Goldman, we remain buy rated on Cameco, where we see 16% upside, around 16% upside from current levels. We believe that first quarter sales volume weakness is not representative of a fundamental change in the demand for uranium. We also believe that investor concerns around the company's lack of exposure to the spot market stems from opaqueness of the term price discovery mechanism for evaluation of forward estimates, causing a relatively greater sensitivity in how the shares trade. While the spot market provides for a more visible price, we continue to believe that the volumes traded in the spot market are not reflective of fundamental demand. Okay, that's an important paragraph. And I'm going to break it down for you because, not just because of uranium, because that's silver. See, the spot market is what people see. In our case, it's the futures in silver's case and spot market. But more volume trades on the term side that you don't see. There's no healthy futures market, all right, for uranium. So you trade spot, and all we see is the spot price. But the deals are going down deferred, and you're not seeing that. They're telling you that the spot price does not reflect the actual demand. Silver, they're telling you that the futures price does not reflect the actual spot demand. There's tails and dogs here. Anyway, so I think that's interesting that they would share that. Banks will share their expertise and edge when it corroborates their story, and they won't when it gives away their game. So see this here? It means the price you see is not the price we do deals at. That's all it means. It's important though. Okay, HSBC, we have that report. We have this report. We have more here, sorry. Estimate changes and valuation. We are updating our 2024 to 2026 earnings per share estimates from Canadian dollar 143, 259, 279 to 104, 273, and 299. Notice they lowered the fronts and raised the backs. Our estimate changes are largely driven by Q1 24 earnings results and revised expectations. Our updated price targets are US dollar 56, Canadian dollar 76, based on a 30 times PE multiple to our 2024-26 average earnings per share estimates. We have that full analysis at the bottom, and they go through 5 or 6 points why they're keeping it. The word of caution is anytime you have bad news coming out of a company, right, like that, you want to see if they're hiding anything else. Now, I don't think they are, and here's why. Goldman just started covering them. So you're not going to alienate one of the most positive analytical firms to your stock by holding back on them. So I think this report is genuine in that Goldman's on top of it. All right, moving on to silver. HSBC made a comment on silver today, this morning, just now. HSBC forecasts a 2024 price of $25.38 per ounce for silver. Now, yeah, I know it's too low, right? But that's what they do. It's a reiteration. So they're reiterating, they're not raising their target. And then they said HSBC widening deficits help limit silver price downside, but above ground stocks ample to fill shortfall. I haven't seen them say that recently, or any bank say that recently. They're trotting out the "we found the silver" concept. And what they're saying is, what they're implying is, whether it's true or not, we don't know. What they're implying is scrap has been found, and at a certain price, it'll hit the market. So that's it. That's what they're trying to tell you. I think whether it's true or not is irrelevant to me. I don't think any of these things are true, but I do think the fact that they're willing to say it now, because they weren't willing to say it before and they were just kind of hiding, means that they may have some bullets in their gun again. So just be careful of any rallies that go above 30 that don't stay above 30. I want to move to the news because, well, let's just go through it. Disney shares tumbled 9.5% on Tuesday, even as it reported the first profit on its core streaming business since it leapt into a battle with Netflix 5 years ago. Okay, the whole woke stuff surrounding Disney, and they're off their path, their family path, reminds me of the 1970s and 1980s. In the 1970s, Disney went downhill. The quality of their products stunk. Their movies ended up being lower budget. After Herbie the Love Bug, it was all downhill. They just started regurgitating stuff. The animation was bad, et cetera, et cetera. And then in the 80s, they got very dark. I forget the name of it. I was too old to watch them, but it was like Dark Star or something like that. They were kind of cool. My understanding is, but they were a little bit dark. Anyway, Disney's losing its way. That's my comment. Apple announced new versions of its iPad Air and iPad Pro tablet computers on Tuesday. All right. This is the sign of a company that's run out of ideas. Apple accoutrements model, new, improved, and Oreo ice cream. What do I mean by that? Apple announced new versions of its iPad Air and iPad Pro tablet computers. That's like walking into the supermarket and seeing Tide new and improved. Sales are down. Let's make it new and improved. Let's do something that we could have done before, but held back on. Now, the Oreo ice cream comment, they also talked about this new pen. What is the pen? I'm sure it's kind of cool, but it's a pen, right? It's a pen that does the same thing as a watch, but it has a stylus that moves. It's a mouse inside of a pen. They're taking the technology in different platforms and putting it in different things. So they have your watch, they have your phone, they have your wallet. That's your Apple Wallet, right? And now they want your pen. So this is Oreo ice cream. Oreos are a popular brand. Let's put it in ice cream. Let's put it in this. Let's put it in that. Oreo candy, Oreo gum. And that's what's going on. So I'm not saying these aren't profit making, but I'm saying that this is a sign of you're milking your existing product, you're mining your existing product for profits. You're taking advantage of incumbency. You're not innovating. So they're not an innovative company anymore. That's it. That's what they're doing. The next thing, young Americans are starting out with more credit card debt than generations before them. My comment on that is, well, you're now generationally training people to be debt slaves at a much younger age, and that leads to government dependency, which leads to people getting their debt forgiven in return for low-paying jobs at the government. Very Orwellian. The Biden administration has revoked export licenses that allow Intel and Qualcomm to supply Huawei, I'm not sure how to say it, with semiconductors as Washington increases the pressure on the Chinese telecom company. All right, we're complaining that they have too much export capacity. We're complaining essentially that they're doing what Japan did in the 80s, dumping or getting ready to dump products on us to make us non-competitive. And that's warfare in a mercantilist or protectionist environment. And we were successful doing this when Japan dumped. So there's a parallel to Japan, Japan chip dumping, semiconductor dumping in the 80s. But there's a twist. Japan did what we wanted them to do monetarily. We wanted their currency weak, it was weak. We wanted their currency strong, it was strong. So China's not a satellite of the US. So this is going to be the beginning of ugliness, in my opinion. A number of private equity firms have been considering a buyout of Peloton. The geopolitics here, draw your attention to this. If you're a person who has money in energy stocks, Ukraine's largest private electricity company said the Russian attack caused serious damage at 3 thermal power plants. Point of reference, when the COVID crisis started and the supply chains broke, those transformers you see on the streets next to the telephone poles, well, it became a 1-year wait to get new ones if they blew out. And then in 2023, it's now a 3-year wait. Okay, so the word is that we're sending they're called transformers. We're sending our transformers to help keep their grid up in Ukraine. The point is, this is bad for America, as Americans, taking care of Americans first of all. Second of all, find a company that's involved in the manufacture of transformers. That's important with regards to pieces of the energy grid, and you might have something really good there. Moving on. Today we have wholesale inventories at 10 a.m. and a couple other things, but we got speakers again. And there's the Goldman Sachs report at the bottom. I'm Vince. Have a great day. See you tomorrow.